Hello everyone. I wanted to spend just a few minutes talking about actual company stock and looking at some of the information. And I just happened to be this week, I got an email. I have through my TD Ameritrade account here. And don't worry, I don't have any account information. You can log on and see. But I just have it set up so basically 3 days before a dividend record date, they send me an alert. And so it's just this nice snapshot of the company financial information. And since we were talking about a couple of things related to the stock prices, I just thought this would be a great example to show you. And what this shows, let's go ahead and just stroll through here. So we've got 3 days before the dividend date of January 21st. Obviously, I'm a few days late recording this because I got it on the 18th. But we have the company name is Procter & Gamble, PG. And I used to live in, got my MBA at the University of Cincinnati, and obviously very familiar with the company since it's headquartered there. And we had my classmates were from Procter & Gamble, and some people actually, when we graduated, actually went to Procter & Gamble. So, that company was very much in the limelight in our conversations throughout the MBA program. But as far as the price goes here, so I just wanted to show you what some of the items were. So it's 0.7907 dividend. It's payable date on February the 16th, but the record date is January 22nd. So that means all the records, they take a snapshot of who are the stockholders as of January 22nd, and I'm assuming they probably do at the end of the day. And so if you sell your stock on January 21st, you get no dividend pays out. But what you can do is keep it until January 23rd. You can sell your stock and still receive dividend payments because the record date is January 22nd. So any stockholders on January 22nd will receive the dividend payment. Now it takes them, there's a lag time obviously if they've got several million investors and lots of stocks. It actually doesn't give how many outstanding shares they have on this snapshot, but you can easily look that information up. So you would but what they do is then it just takes some time to actually process all the payments, and it will be paid on February 16th. So obviously, as I mentioned before, a lot of these have large institutional investors, and all of that's pretty much done electronically now. Now. So all this money, or I say all this money, it's just end up being a couple dollars at the end of the day, but it just automatically gets deposited into my TD Ameritrade account, and I do see it as a line item as a dividend payment for Procter & Gamble. So here's just some basic other stock information. Today's changed. That day it went down 0.75%, which was $1.02, and it has a 5-day trend. You can kind of see what it's doing there. Right, so the last price. So that's the stock price, 134.78, and they have to put a timestamp on it because obviously the prices go up and down even after market trading and such. So this is just the time that they use to send this information out. The annual dividend is $3.16. So what they do with Procter & Gamble is they pay dividends quarterly, and some companies can pay dividends monthly. That's pretty rare though, so it's usually a quarterly dividend. But you have to remember they take the last 4 dividends when you're looking at any other company information, and they look at annual dividend. They can't use future projections to do their calculations. So they do the past 4. In this case, because it's an annual dividend and it's paid out quarterly, they do the past year, and they use that as a calculation amount. And they assume it's either at least going to stay the same, and it may increase. So for the dividend yield, and I think that is an actual calculation. I'm going to grab my information here. Let's see. So dividend yield is a dividend amount, and it's the annual dividend amount divided by the stock price. So let's see, 6 divided by 7.8. I'm doing the math here. Yeah, right. So I get 2.29%. So I'm sure there's some rounding errors not rounding errors, but rounding items somewhere through there. So yeah, if you take the $3.16 divided by the 134.78, it gives you about the 235. And but they're only the 316, they're only paying that out quarterly. So you take 316 divided by 4 cents, and that's 79 cents. And obviously they're paying 79.07. So that's all done electronically. The portions of cents there, so that is even a thing. All right, so I thought this had the EPS and some other dividend information here. But normally when you go to look at some of this information, you will find the price to earnings ratio as well as the EPS. And just while I have you here, we'll just look at this very quickly. So the earnings per share is going to be the net income minus any preferred stock dividend that was paid out. And you are going to actually divide that by the weighted average number of common stock information. So I can actually go and try to look at PG stock, and let's see if we can find that data for us very quickly here. All right, so right here is where we have, so this is today's information. Your PE ratio is 24.99. And remember what you would do with that is then you would compare it to other companies within the industry just to see, is that above, is it overpriced, is it underpriced, that sort of thing. Oh, I'm sorry, we were looking at EPS, that wasn't there. Okay, but price to earnings ratio, just as a refresher, that's your market price per share divided by your earnings per share. And that's the one where you see if and I was correct in my statement about where PE ratio, if it is overpriced or underpriced based on, you know, what are the competitors doing, what's the value. Some things you can go back and look at and say, okay, what was the PE ratio, let's say 2 years ago before the pandemic hit, and say, you know, were the sales the same? Have sales gone up, and did their earnings and such go up as well, and net income? So there's some other things you got to look at to make sure that the stock price is actually priced based on market information and value, and not on a supply and demand can do it as well. And I say that from a lot of the new thing to do with young people is to invest and buy partial stock shares from Robinhood. But most of those investors, they're finding out, aren't buying it based on the value of the company, but basically just speculative, which means they're running the price of the stock up, but it's not based on how the company's actually performing. So I guess you can make money on that, but the other bad thing is you can lose a lot more money, especially if you don't understand market fundamentals and that there's actually based on value, projected value of a company and such. Anyways, we'll save that for another day. But as I said before, we have the dividend yield here as well. It's 2.39%. We have the market open. That's what the price was when it opened. That was the high for the day. 129.90 was the low for the day. Your market cap, which is your market capitalization, and remember that is your the number of outstanding shares multiplied by today's stock price of 132.24. So that takes it to a $325 billion company. And it looks like that's about pretty much, you have the 52-week high and low. So the high was at 146 and the low within the last year was $94. So you can kind of see where it's trending towards the higher end again. And so that's always usually positive information as well. All right. Thank you for joining me. Bye.